Hello, everybody. My name is Philip Palumbo. I am the host of the Palumbo podcast, where we interview some of the most successful founders of businesses to learn how they got to the top. Today, I'm really excited to have with us Nick Leopard of Accordion, which is founded the firm about 15 years ago. Accordion is a global consulting firm, highly specialized in serving the CFOs of private equity-backed businesses. So I've got to know Nick for a long time. Great guy. So Nick, thanks for joining us today. I appreciate it.
Excited to be on there, Phil.
All right, awesome. So Nick, like I always like to start off, right? So you've been a successful entrepreneur even prior to Accordion.
Yep.
You were in the corporate world at Bear Stearns, I believe, as an investment banking side.
Correct. Yeah.
So what got you to say to yourself, you know what? I'm going to launch my own firm. I'm going to just move
Yeah.
it to corporate America. So what drove you to do that?
I mean, I think if you're an entrepreneur, you always sort of have this burning desire to start something. So I always had that, always had natural sort of born leadership. I think traits that I always want to lean in on is, because I know you from kids lacrosse world as well. Like I
Right.
was team captain of Division I team at St. Joe's and loved that. But what really sort of always got me really because I loved business and always like trying to pick apart business models. My first job out of college was a company back in DC area where I grew up called Capital Source. And it's a super young entrepreneurial place that was run by a guy named John Delaney, who was one of the presidential candidates for the Democrats in the last election. And I think he was 38 at the time. And that place was magic. We went public in 3 years since I was there as a $3 billion market cap company.
Wow.
Really entrepreneurial, a lot of energy to the firm and very collaborative. And honestly, I thought first job out of college, I was like, this is what every company is like. And I really wanted to get into investment banking, ultimately made the move from there into Bear Stearns to investment banking. I was in the financial institutions group, so Capital Source happened to be one of our clients. I loved the work, but I could quickly tell you that all cultures are not created the same. Investment banking culture versus that of Capital Source were wildly, wildly different. I spent a few years there and I left and went to a mezzanine fund. And I was really itching to kind of figure out, I was looking at all these middle market companies we were investing in and said, like I would love to run something and started thinking about all these different businesses, thinking about acquiring something. And then the 2008 financial crisis hit. And as a mezz fund, we ended up having to take much bigger ownership positions in the companies we had lent money to, just because they were hitting the skids, needed more support. And it was always the CFOs were leaning into guys like myself. I was late 20s saying, hey, Nick, can you help us with budgeting and forecasting, help sell off this asset, prepare the company for sale? And it just dawned on me that private equity as an asset class was only getting bigger. At the time, operating partners were just starting, where they're really sort of thinking about like how do we deploy resources into the portfolio companies. And one of the most underserved, under-resourced, and one of the most areas of the most amount of pressure was the office of the CFO. And so, what do private equity investors really sort of lean into their own background is like the finance side of the house, data analytics, better visibility into the company, running a more efficient finance function to help drive the value creation plan forward. And that was a massively underserved market. There was the big four that didn't really serve it. The big strategy consulting firms didn't serve it and said, hey, I want to really build a firm that focuses on this massive tailwind of an asset class getting bigger, but also on area that I see a real need within the portfolio of our own investments.
That is amazing. So you just cited this and you saw the gap within the industry, and then you said to yourself, I'm going to build a business around this, and that's exactly what you did. And then the tailwind behind PE has just been amazing the past, really since you launched your firm, right? So the growth of private equity and it only continues to grow. So that's amazing, man. So then when you decided that okay, this is going to be a great business model, you did your research. Now you're like, okay, now you have to execute. So what was that feeling like? Were you nervous? How would you walk
So
one through that
it's
experience?
phenomenal. I mean, I sort of like it's a phenomenal question. I sort of just framed out the market need, but the other market is the talent market as well. Like, how do you execute and actually build a great team to go compete with big global consulting firms. So going back to bring it full circle, going back to the capital source days, which I mentioned, looked at it and said, hey, look, most companies are built with a North Star of like, we're going to have the best clients or we're going to have the best service. And I took a completely different approach and said, we're going to have a North Star being a better way to work in finance. So there's plenty of talent on the street, especially, post 2008, we're looking for a great place that they can be part of something that feels very much like we're building something unique in the market, really entrepreneurial, highly collaborative, and said, now it's on every single one of our TVs across every single one of our offices, but it says, a better way to work in finance. And still to that day, our North Star has been more of a people value proposition versus a client first. And the thinking behind that is like, look, get the very best talent. Then you drive the very best service. Then you get the best clients. And it just becomes this like virtuous cycle and really has helped drive a lot of that success. So it was taking sort of the learnings from like Capital Source to Bear Stearns, and be like, what is it around like, the actual type of work, but also what type of culture do you want to create? It's always been really central to our business. And that has paid off in spades. I mean, we've got a 14-year revenue CAGR of 56%. So it's just been a rocket ship.
Wow.
For almost 15 years now. And we have 1,200 employees now across 10 offices in the US. We've got just over 600 people in India, and we're opening up Europe later this year. But I think to go back to your question.
And Nick, you started this from completely zero.
From zero. Yeah.
To all of that.
I mean, to take it a step further, I think my wife thought I was like crazy because I'd quit a perfectly good job 4 months after we had our first kid and said, you know what, I believe in this. There's also sort of just, ambition and confidence that like you'll figure out, you have a will to win. And I think like we've all grown up in sports and you've seen other successful entrepreneurs. It's like, and some early investors that were really like, friends, and they were like, look, Nick, we didn't fully understand what you're doing, but like, we just knew you'd find a way to win. And like, I think that is like, that's sort of indicative of how we've gone. It's like, you're going to run into all these, like, it's an uphill battle. Even like when you talk about the scale that we have, like now it's like, every day it's a chess game, but it's like, you're just finding new creative ways to just build a better company. So those first couple of years were tough, and we like joke, like I've got all these friends that stayed on Wall Street. We're making great money. And we just grinded it out for years. It wasn't until like 6-7 years in that I really started to make a real pivot towards increased growth.
Nick, I find always interesting about business, right? So I think about my business, wealth management, about wealth management. And I think like, gosh, like we have an incredible product to offer the world. And but the big thing, like anything else, is like, okay, well, how do we get that message out there? Because I feel like everybody should be with us, right? Like that's the excitement that you have inside of you and the passion as far as like what I do, which I'm sure with you do. So when you had that model and when you were at zero or started to climb, but you knew like, wow, this is a great product, the model like built, like how do you go out there to the market to start telling that story? I always tell people all the time, like, you and I can make this, you can make a better widget than me, but if I'm a better marketer, I'm going to win, right? So how do you think of marketing, and how do you think about getting that message across to people so you could start to grow parabolically like you've been?
Well, I mean, I think all of us are probably the chief revenue officer for so long, if not forever. And it's a role that I embrace and I love. And you have to be the chief marketer out there. And I think all guys, and I'll talk about, just make sure I come back to it. I'll talk about how we've scaled the business. But you've got to stay connected to the front lines, and you can't really help. You can sit in a room and come up with a PowerPoint deck on strategy and, a 5-year plan. But like, unless you're talking to clients out in the market, you actually have no idea if all those little ideas are validated, and you're going to make little tweaks along the way. So you've got to be out in front and being the one like selling. And, from zero, it's like, I just fill my day. Like, if I were to go back all the way to the very beginning, I remember, having worked very long hours, through banking and a fund, I'd wake up at like 4:30 in the morning. Like I said, we had a newborn, but I'd get on FactSet, which we use at a time, like literally look at like every news article I could, like what's going on, like in private equity, who announced a deal. And I'd just create like a list from like 4:30 in the morning to like 6 a.m. of like everyone on my call that day. Even if it was just like, hey, congrats on this deal. Love to get together, have coffee. Or I saw you guys are, you've doing research, like you've held these companies for 4 years. Like, what are you doing like with them? I'd come up with that list, and like 6 a.m. I'd go like work out and then come home, spend some family time, and then like get after it. And it's just like you need to have that motor inside to be like, what am I? Nobody's telling you what to do because like there's no boss. And you're like, but especially if you've raised capital, you have an obligation to investors or you have an obligation to your family, but you also like you have this motor, you just wake up and you're like, all right, what am I going to do today? And you've got to stay like hyper organized around that. And so once I was like building that out, like I just keep like radical notes on like everyone like I met, like has 2 dogs, likes to, play golf or vacations here. And then just like in the calendar, like after so long, it just continues to build. And you ultimately are calling. And I remember people like, it's remarkable how you remember these little things where we talked about, potentially that need 3 months ago. I'm glad you followed up with it. And like, it starts to build upon itself. And now, I mentioned we have 1,200 people, but I think a lot of the people in the organization, our team members here, they look at that and saying like, I see Nick puts the work in and I see how like he doesn't lead from an ivory tower. It's like right out in front. And like, one of our senior guys here, just like he jokes, I'd rather walk in and like sit down with like the analyst versus like sitting down with the senior people. There's plenty of time for that through meetings, but it's like if you show that sort of engagement, both on the front lines of clients and in front lines of people, it really inspires others. But when there's nobody around you at the very beginning, you just got to that motor's got to be humming like every day.
How do you stay motivated to keep things humming every day?
Well, I mean, I think all of us are like, we're like goal oriented, and like you set those goals, like, and just staying on top of it. I think all of us who have had success, it'd be very easy to be like, all right, I've made it. But everyone's motivated by something different. There's always like a chip on shoulder of like, all right, how do we build like the best company? And, I mean, I joke, like not joke, but I sort of think back to like my childhood. It was not glamorous by any means. And like nobody talked to me about grades. I went to like, a middle of the road school. Yeah. And you put it, and then you surround yourself with a bunch of other people that are like very accomplished or had, more resources around them. And I don't care how successful like you are, you always still have that little bit of like, chip of like, hey, I'm going to put the work out. I tell that to my kids. I'm like, look, you might have resources now around you. You may have like this great life, but like in this family, like you do the work. Like, I don't care how smart you are. It's like, you put the work in. I don't care if that's out on the field and like in the classroom and like in business. I mean, it's just like, if that's just a mantra, like you got to put the work in and like that can drive you.
Yeah, it's true. It's interesting, Nick. The way I think we grew up similarly, right? Like me too. Grades weren't talked about in the house. It was like kind of get to work, and so it was a different type of fire that was lit underneath me that I think motivated me to where I am today. I did feel like I got a long way to go, but it's different, and our children, have a different upbringing than we did.
Yeah.
Right? So I wonder, and I think about, okay, well, what's going to be the fire for them? Because they sort of have everything. Do you think about that?
Yeah, I think about it like constantly, and it's I think it's one of the hardest things for people that have gone through this. I'm sure you see it with a lot of your clients as well, but they're like trying to get them exposure though, and like not just seeing like the output of all the work, but actually seeing the work that goes in and like talking to them about, I'm talking about business a lot. I think seeing that, like, seeing what goes into it. So one of the things I did, I was approached by, just recently last year by a friend of mine, who's in the investor group for the Philadelphia Wings. And he came to me and was like, hey, I've got to look at buying a minor league hockey team. Like, would you want to buy it? And I was like, and I love hockey and I play it now. And I said, look, yes, like let's go buy this team. Bought the Binghamton Black Bears. But one of the things with the kids, like I let the kids like fully into like the data room there, like ask them just like rip it apart. And they started taking and they could care less about like global consulting. They have no idea
Right.
what that means. You
Right.
ask them like about a minor league hockey team, and I'm giving you access to like, let's go to the locker room, like you meet the coach, meet the GM, and they're coming back to me and they're like, hey, Dad, do you know, like, because we pay for all the, like their apartment leases, and they're like, do you know these apartment leases come due next year? And like really getting into the details. So to me, like, we do talk about grades a lot. We talk
Yeah.
about that, how, why that's like so important, just to like make, give better access to things in the future, but give them exposure to business and like,
Yeah.
really understanding like how the mechanisms around business, the value drivers, or like what you're trying to accomplish. Like for this, like, yes, we want to be profitable, but I said to them, I was like, one of the things I want to do is like, this is great crown jewel of a small town. Like our first job is to protect the culture, the brand, and create a real sort of magnetic event for this. And that's the first rule of this investment. Others are different,
Right.
but they love talking about it,
That is
and
really
like
cool.
they're fully engaged in it.
Yeah, so that I mean, I feel like that's kind of what I'm doing too. We're focused on the grades, but then I'm getting them engaged in business, in my business, and I'm always talking about business around them, the markets, and and they're engaged and they're listening and they're asking questions. So, our hope is that that helps them kind of give them a head start. That's how kind of how I look at it. I want to shift to culture, Nick, right? So when you think about it, your business, and when you think about this word culture, how do you think of culture? What do you do within your organization to keep the culture humming?
Yeah. Well, I'm assuming a lot of founders listen to this podcast, and they probably all struggle with similar things. Um, when the organization was small, you know, you set the culture. You're there every day. You're walking in. You're talking to people. You care about them. You're talking about strategy like with them, and you're going to client meetings. It's easy to have a real pulse on the culture. One of the things I was really concerned about was as we scale, like if we're in 500 people, how are we ever going to maintain this like special
Right,
sauce?
right,
Um, about 4.5 years ago, brought a friend of mine as our president to really focus on like internal operations and help think about scaling the business. And he came out of Bain and Company, and he had worked on a body of work called Founders Mentality. And Founders Mentality is a book. It's phenomenal. I would suggest it to everybody. But it is about how some special companies lost their way, or some bottled up some of that. And it's about having an owner's mindset, and having a real sort of like insurgency mindset, like we're gonna, like it's us against the world. That's all. That's the offensive moves. The defensive moves, I would argue, are more important. It is saying, if you look at history, like companies lost their way because of four westward winds. One is an unscalable founder. So organization gets bigger, all the decisions still run through the founder, and still just slows the organization down. So how do you create this cadre of many founders where
right.
there's decision rights and more clear roles and responsibilities, and really sort of empower them to maintain that culture? Now if you have a global organization, like a CEO can't be everywhere, or the founder can't be everywhere. And so you potentially lose that culture. So empowering them is important. The other is a lack of accountability, or a loss of accountability. I'd say organization gets bigger, people can hide. We're like, firm's doing well, I'll be taken care of. So you need to start to create comp plans, but also stay true to that collaborative nature that you built the firm on. So to drive real individual accountability, and that's very, very hard. You have to find the right balance between teaming and individual accountability. Third is a lack of radical focus on the front lines. I talked about that just a little bit ago, but it's not managing from an ivory tower, truly understanding the voice of the customer,
Yeah.
and truly understanding the voice of the front line. So like I'll sit on like Glassdoor, like, once a week, and just read any reviews of like
Wow.
employees, like ratings, just to keep that pulse. I think as a CEO, sometimes the information that gets to you can be somewhat manufactured or filtered, and you need to like get beyond like
Absolutely.
first, second, third level and get really, really to the front lines. And then 4 is revenue growing faster than talent. And in the search for growth, and you lower your talent bar, and A's hire A's and B's hire C's and C's co-come.
Absolutely.
And you just gotta make sure that like the financial outcomes will come if you focus on the talent first. And it's not the other way around.
Say that again. I'm sorry, Nick, say that again.
Financial outcomes, if you focus on actually building a great business and you focus on the right talent, the financial outcomes will be a byproduct of that. But if you focus on the financial outcomes first, you'll make a bunch of bad decisions in the long haul just for short-term profitability.
Wow, that's really great advice. We talked about this before a little bit. Let's keep it simple, right? Let's say you have a business that's doing $1 million and you'd say your profit margins are, let's say your net profit margins are, let's say pre-tax is called 30%, right? So you have a decision to make. You have $300,000 of money or free cash flow that you can make a decision on as the owner of the business. You can say, okay, I'll take the full 300, I'll pay tax, I'll invest in real estate, stocks, and look to grow this nest egg here. I have my business here, which is my largest financial asset for most of us as founders, right? So how do you think of that, right? So normally, when you invest capital back into the business, you get a higher. Normally, the invested rate of return on that is greater than you can get in real estate and stocks. I found that personally in my business, and that's true for many businesses. So how do you think of that, and how would you advise someone who owns a business?
Yeah, I mean, I think about my own like personal like portfolio as here's this capital I have outside of Accordion that I should really focus on like preservation like there and just keep that very, very simple. There's a lot of like personal investments along the way, but it only makes up a small portion of like the broader pool. But if I could focus all my time on something that's growing, 50% a year, like
Right.
that's where like have someone that can focus on like the other side and just focus on capital preservation. Yes, with a good return, but it's not going to return at the rate that your own like large asset of the company you started is going to return.
So,
In most cases.
So would you say, if you threw a number at it, would you say the way you think of it would be 80% you're reinvesting back in the business, 20% you kind of put in a portfolio of assets or buy?
Yeah, I mean we've taken a slightly different approach. We're 2 times private equity backed now. So
Wow, okay.
before we had private equity backing, I'd look at it saying, okay, when every 6 months, 12 months, sure, let's look at the profits and say, what are we doing from a dividend perspective? And I'll tell you, for many, many, many years, there was 0 dividends. It was all going back into the business. And then, and that really helped like power and accelerate the business.
The growth.
Yeah. Yeah. And I say that of like reinvesting, we're not in business of like, we're investing in like hard assets. We're just saying, hey, look, we know the market demand is there. We should go hire 10 more people, 15 more people, and almost run profitability to 0. Right. And then ultimately profitability will catch up on that.
Yeah.
So
I guess the only thing to interject, but the thing about that, and this is, I think, the problem some founders have is like, you're really making a huge bet on your business, right? That you'll get that accelerated growth. So it's a mindset that one needs to have, where others would be a little more conservative and say, hey, I want to take some money out of the business. But to your point, it's like, that's where you're going to get the highest return. If you can get it right, I mean, it'll pay.
I think there's a real choice of entrepreneurs. I think there's a choice, and I'd probably call it 80% of businesses are run as a lifestyle business. I'm building this.
That's right.
I want to take capital out. I want to I want to have a nice life.
That's right.
And then there's others that are like, no, look, I'm looking to build something of real scale.
Like an enterprise.
And when you have somebody who thinks they're doing both, you run into all sorts of issues.
Right.
And so we've acquired a number of firms, and I can tell you, like, those firms are awesome, but like sometimes the founders never made that decision. They're like, I don't understand why I'm growing so much, why I'm not growing where I capped out at $10 million of revenue or something. And you're like, well, you take all the money out, yet you're still expected to grow at this rate. So like you have to make that decision very early on in the founding of the company or in the early stages of the company, because you can't really have both. For us, we just continue to invest. I mean, we're a very profitable business now, but that cash flow now is not just being taken out of the business. I mean, We're continuing to invest just because it's in our bones of like, that's how we built this company. We will continue to build, but we're using that capital now for M&A. We're using it to pay down debt, which we then use for, other M&A. We make a ton of hires. We need to do that to meet the demand in the market.
Yeah, I know I said I wanted to go 30 minutes, but I got to get in a couple more quick questions. So hopefully you're okay with time. When you initially started your company, you were 100% owner of your company?
No, I raised a little bit of capital at the beginning. I talked about sort of doing it at a place where we just had a 4-month-old at the time. And I was like, look, let's raise capital for working capital to have a base where I could continue. Actually, it was like, we can run this unprofitable. And so those buddies of mine had been in since the beginning. I was 29 at the time. And so I went to any one of my friends who had made any sort of money and said, you should invest in this. And it was a small minority hold.
Right. So let's say, for example, you take an owner that has 100% equity in his firm, right? What is your view on equity and relinquishing equity to others within a firm?
Look, I am a big believer of broad employee ownership.
Wow.
And
really?
very, very much so. I've got plenty of friends who own businesses that they have a nice life, but like they're constantly, they're very much like managing like the business. Like if you want to create a firm that like everyone feels like, I feel like I work for everyone in the company. And I think that's a very different way of running the business. And in the very beginning, we used to distribute equity to everyone like in the firm. And now we do it at a certain level.
Right.
So they're coming in. But what I would say, like we've gone through a couple liquidity events to see people who have been here, put the work in, and now see the rewards that come from equity, not just cash compensation. That is like incredibly fulfilling. And like in the last private equity trade, just seeing people that are now like, buying second homes or like, vacations, all because they got the rewards of the work that they put in because they were an equity holder. And it's incredibly fulfilling for me.
That is really awesome. So last question, Nick. This AI revolution that we're going through right now, right? Are you utilizing it within your business? And what is your general view about it going forward?
I mean, I think there's a lot of chatter about it. I think it's going to be a massive tailwind to many, many businesses. We are looking at it on a lot of like workflow management opportunities, whether it be something like, hey, I need to write a client proposal that involves these things, and just being able to, rather than like, cut and paste all these, which could take, a couple hours, like that being done in 2 minutes and having something edited off of. I think there's a lot of workflow management opportunities there. Now, a lot of people are just talking about AI without a lot of like real foundational understanding. And the market's evolving in such an incredible way that it's really hard to keep up on this. We're seeing a lot of applications in our work around like the office of the CFO of like, how can we drive more efficient finance functions? How can we, eliminate like mistakes, ultimately drive like faster and better insights into companies to make like better decision-making in real time by leveraging AI. I think it's here to stay. And I think there's a lot of buzz about it, and see how all that plays out, but there's real applicable use cases I get pretty excited about.
You talked to Palantir at all as far as their services? They do a nice job on the quote.
A great job.
Yeah, really good job.
Yeah.
This is awesome, Nick. Listen, I really appreciate your time today very much. This is amazing. Great insight, which is exactly what I knew I was going to get from you. You're such a great guy, man. And congratulations on all your success. And I wish you continued success going forward.
Really enjoyed this.
Awesome.
Thanks. Bye, Phil.